annualized return of Bitcoin is 140% a year since 2012. You can own any VC fund, any other asset class. Nothing comes close. 20 million% returns since 2012. 20 million%. Since I started Real Vision, Bitcoin is 450,000% returns. And we started talking about it. But ETH came a cycle later, a couple of cycles later, actually. Well, ETH is about 160 something percent, 165% returns annualized.
The current economic backdrop is the interplay of three factors that are setting the stage for an unprecedented influx in global liquidity. It's officially been 4 years since the COVID-19 pandemic.
2020 is now the deadliest year in U.S. history.
Fast-breaking developments in the coronavirus emergency in the U.S. and around the world. The number of cases soaring just today.
During the 2020 lockdowns, an unprecedented amount of debt was issued.
Congress finally cleared a $900 billion coronavirus relief package just before midnight last night, and with it, a $1.4 trillion bill that funds the government through the fiscal year.
And now the time has come to service that debt. Raoul Pal, who has formed a thesis that attributes the debasement of currency to the monetization of debt to repay interest payments, explains that the sheer volume of liquidity that will enter the market in the coming months is like nothing we've ever seen. Of course, a rising tide raises all ships, but Raoul, billionaire investor and founder and CEO of Real Vision, is convinced that only two asset classes will truly make you any wealth. And of these two, one will rule them all. Let's jump in to hear it all.
We're at the phase where Bitcoin halving is happening, the election cycle where they give out free candy to the kid, stimulus, and we generally get, well, we've got the central bank who want to cut rates, even though inflation's not playing that game, and then we've got global stimulus cycle from the weekly global liquidity index, which has been rising. So this is the part where liquidity starts going up significantly. The Europeans are going to start cutting. We've already seen, I think, the Swiss cut. We're going to see a few nations cut. Latin America was first to hike, started cutting. Brazil. So we'll see the cutting cycle, global cutting cycle will pick up. We've got China with a very lackluster economy. In fact, it's a debt deflationary trap driven by an aging population and excess debt. We all know about those things because we're all living in one, whether we're living in Europe or living in the US or Japan. So they're going to stimulate more. The Japanese are pretending to raise rates, but they're still running kind of negative interest rate policies when you look at it in real terms. And we should see inflation continuing to slowly decline. Now, it's been flatlining for a while, but many of you have seen me tweet out a chart of previous inflation cycles versus this one. It always has this flat bit, then it hooks down. If I look at the Trueflation Index, it's falling. I know nobody believes me. Either way, the Federal Reserve want to cut rates. Why? Because of the Everything Code. I've told you about the Everything Code. If you've not seen it before, please watch the YouTube videos on the Everything Code. The Everything Code basically suggests that they have to use liquidity to monetize the interest payments on the debt. We're coming into the teeth of the interest payments now, and we're paying for the interest for the debt we issued during the pandemic. So we got a lot of payments to do. The bond market's freaking out from this, obviously, because they're like, how can we pay for all of this stuff at 5.5% rates without issuing more and more and more debt? Gold market's breaking out on the back of this, and so it should be, because the answer is going to be they're going to have to use liquidity. Will they use quantitative easing? Probably not. Why? Because we all know the trick, and we know the name quantitative easing equals money printer goes blur. So what will they do? Well, they've been running down the reverse repo, what the format is, but they've been running down that, which means banks have been putting money into the market. Then they have been they're still doing quantitative tightening, but they're already talking about, well, at some point we need to stop that. Of course they do, because the reverse repo is almost empty. That runs the Fed out of opportunities at this point. Next part is, what do the Treasury do? Because the Fed is basically just helping the Treasury now. Well, the Treasury's been building up the Treasury General account. That's their bank account. And then what they will do is start running that down over the election, which is liquidity flushing into the system. And that is a very powerful backdrop. This macro crypto summer is the powerful backdrop for assets, because you're debasing currency. See my tweet from yesterday? I think it's already had 5,000 likes or something. As people understand that currency is being debased, assets go up. The assets that have network effects, technology and crypto, go up the most. That's macro summer and the debasement cycle.
The Fed was expected to cut rates at the last announcement, but decided to keep it up.
The market should temper expectations of 3 rate cuts this year and possibly even give small odds to the less likely but not impossible notion of no cut at all.
Raoul is convinced this is just a delay tactic. Signs of economic strain are starting to show globally, and the only way to prevent a 1929-style crash is to print. The mechanism may be different, But Raoul is convinced that the result will be the same. More cowbell, as he fondly refers to it. This backdrop is one factor for Raoul's bullishness. The other is the fact that election season is approaching, and the ruling party is incentivized to allow an influx of liquidity into the system. The final factor that completes the trifecta is the upcoming halving that's set to cut Bitcoin's daily supply in half. Combine all of these regular factors with the ETFs and the newly approved spot Bitcoin and Ether ETFs in Hong Kong, and it seems this cycle will be nothing like we've ever seen. Sit back as we bring you more clips from the interview.
Okay, NASDAQ, crypto. Everybody gets the NASDAQ thing. Okay, fine, we've got AI. We'll call it the AI bubble this time around. Like, what bubble is it? It was the FANG bubble, and now it's the Mag 7 bubble, and then it's the AI bubble. It's not a bubble, for God's sake, people. I don't know why you can't understand this. It's about 8% debasement a year, so that gives it 8% of its 17% performance each year in the NASDAQ, and the rest is driven by technology and adoption effects. It's just not going to stop. And the price earnings keeps going up because earnings are variable, so they don't get affected by debasement. P goes up because of debasement. So earnings grows in line with GDP growth-ish, and good companies do better, bad companies do worse, but that's the kind of metric there, or maybe even M2 growth. But really, currency debasement, that's what drives the P, so the P keeps going up. Okay, it's not really expensive. Kind of, you need to adjust it by all of these things. But the NASDAQ and the whole technology, I love it. I'm so deeply involved. I'm not going to go through it all today with you guys because it's not fair to give it all away, but I'm talking about, I think there's 6 years to make money before we hit a wall. And the wall is something I call the economic singularity. And that's to come, where we don't even know what economies will do because everything is going to change. And that's based on that formula of GDP, trend rate of GDP growth equals population growth, productivity growth plus debt growth. Debt growth bit's broken. It's just servicing of old debts. Productivity and population have been declining because of age. Add in the robots and the AI, you get infinite population, you can get infinite GDP growth. Kind of bananas numbers.
Raoul has become popular for his exponential age thesis, which basically predicts that there will be a convergence in multiple emerging technologies around the same time, leading to supermassive growth. He foresees that there's roughly 6 years until the materialization of this phenomena, after which the economy and markets will be nearly impossible to understand. Next, Raoul further discusses the impact of debasement and his top 3 cryptocurrency picks. Let's head back in.
So given that all assets are driven by debasement, everything is basically driven by the business cycle, and everything is correlated. Some things lead, crypto and technology lead, as the business cycle bottoms, so ISM comes across 50, commodities and cyclical plays come into play. There are some lagged things that come behind, real estate and stuff. But anyway, business cycle rules it all, everything's highly correlated, it's all driven by the everything code. So the dirty secret is this is the easiest game in the world. You just divide all the asset prices by each other, look for the best performing asset. So that's what I did, and that's what I uncovered, and that's what changed everything about me. As you know, I've been involved in crypto since 2012, but I really started to realize that if I divide S&P by crypto, it's down 99.98%. They're all down since 2012 versus Bitcoin. And technology, the secular bull market that's made everybody a fortune, down 99.93%. So everything goes down 99.9% over time versus crypto. But it's not over that 10 years time horizon, 12 years time horizon. Actually, when you look at it, crypto is the best performing asset in the world, 3 out of 4 years. 4th year, it's the worst performing asset. Then it's the best performing for 3 years. Then it's the worst performing. This keeps going on. Bitcoin, even with 3 or 4 80% drawdowns-ish, 75, whatever the average is, still has done about 140% a year returns. Annualized return of Bitcoin is 140% a year since 2012. You can own any VC fund, any other asset class. Nothing comes close. 20 million% returns since 2012. Since I started Real Vision, Bitcoin is 450,000% returns, and we started talking about it. But ETH came a cycle later, a couple of cycles later actually. Well, ETH is about 160 something percent, 165% returns annualized. Been around less. So anyway, I think this space is going from 2.5 trillion to maybe 12 trillion this cycle to 100 trillion, let's say 2032. That'd be the largest, fastest wealth accumulation of all time. I'm not going to talk about my NFT thesis, but it's built on that thesis, that there is going to be $1 trillion of new wealth created, which would be the largest amount of new wealth created in all history. That's, by the way, twice the size of the 100-year accumulation of wealth of the S&P 500, just to get your heads around what it is. Maybe I'm wrong by 50%. So 50 trillion, so it's the same as the S&P over 100 years. 25 trillion, half the amount the entire US economy had generated in equities over the last 100 years. It's bananas.
The entire cryptocurrency market cap is around $2.5 trillion. Raoul has predicted that he expects the market to go as high as $12 trillion this cycle, which is about a 500% increase from the current point. Such explosive performance will certainly raise the prices of multiple cryptocurrency, and considering the length of previous cycles, it will be done in a ridiculously short time frame. Raoul's advice is to stop overthinking it and get in now. What do you think about Raoul's bullishness? To see the latest in crypto news, watch this video here.